Stocks were buzzing and Star Cement is trending around the 52-week highs. The management has laid out an ambitious plan to hit around 10 million tons in terms of capacity. Earlier, I spoke to Tushar Bhajanka, the executive director at Star Cement, and began by asking him about how demand's on the ground, what kind of volume growth they're looking at, and capacity additions as well. Let's hear out what he had to tell us.
In Northeast, the demand has been growing fairly well, from a 9 to 10% growth. And we do expect, even in FY24, the demand to be steady. In markets like Bihar, the demand has been growing in high double digits. And, from a Star Cement volume perspective, we have grown by about 20% last year. And we do plan to grow about 20% in the coming year as well.
Okay, all right. So volumes will end at close to around 4.8 million tons for the year?
Yes, that is the target. And till now, we are faring well on the target.
Got it. All right. Tushar, give us a couple of details then. What about pricing? Has there been any movement in pricing, both in the east as well as the northeast part of the country? And also, premium sales as a percentage of your total mix is close to around 4%, I understand. Where do you see this number headed?
So in terms of pricing, I don't think there has been a significant increase in pricing in Q1 compared to Q4 last year. And in terms of premium sales, yes, our premium sales is only 4% of our overall sales. But we do intend to focus on this financial year. And we are making some changes to our premium product and planning to relaunch it in the next 2-3 months.
So where does this number head from 4% then?
So I think for this year, we'll be targeting something about 8 to 9%.
8 to 9%. All right. Tushar, for y'all in your profitability calculation, there's also been an element of incentives. But some of those incentives have expired in the past year. So for the last year, I think your incentives were around 120 crores. What kind of incentives should we account for in FY24? And then in FY25, again, you'll have capacity coming on stream. So rough incentive calculation that we should work with for FY24 and FY25.
Yeah. So, of course, our subsidies, a major part of our subsidies got over in Jan 2023. And I think we have about 30 crores of the 120 crores still left as subsidy, which we'll get in FY24. And once our new grinding unit comes up, which would be towards the end of this financial year, we would be, looking at SGST benefit in one of our major markets.
All right. What does this mean in terms of EBITDA per ton then, Tushar? Last year, on an average for the year, Q4 was brilliant. You did more than 1,350 rupees per ton. But for the year, on an average, you were in that vicinity of around 1,170 rupees per ton. On this sort of a base, where is the EBITDA per ton move?
So this year, we'll be targeting an EBITDA per ton of about 1,250 rupees on an average. So that's the target for FY24. And, when we do start getting our subsidies from the new expansions, I think we could be looking at something between 1,350 to 1,400 rupees per ton.
All right. So 1,350 to 1,400 will be for FY25, and for FY24 should be around 1,250. Are we getting those numbers correct?
Yes, that's correct.
All right. Tushar, we've got your plan. You want to move from close to around this 5.5 million tons towards 10 million tons. So that's already on the drawing board. But there were some indications that maybe in a couple of quarters, maybe in the first half of this year, Star Cement could be looking at inorganic growth. Any truth to that?
Yes, so we are, of course, looking to grow, in areas outside Northeast as well. And we have, been actively looking at the opportunities inorganically. And, and if we are working on one or two such, projects. And once we are able to finalize something, we'll definitely discuss it in detail.
What's your appetite, Tushar? What kind of an asset will we be looking at? Are you looking at a couple of million tons? Are you willing to take a bigger bite in terms of... So give us a potential size of an asset that you're looking at, and which location would be preferred? If not Northeast, which is your preferred location or where you have all your capacity as of now, then which is the other region you could be looking at?
So, we'll be looking for something which is small, and then we can probably organically grow it. So we'll be looking at something which is more than 2 million tons for sure. And East definitely would be the market that we'll be targeting, given that it's growing at a good pace, and it's a natural continuation for us, from Northeast perspective.
And in the past, I think you all were a little bit interested even in Emami, but that didn't go according to plan, I think. So, but you're saying you look at a smaller asset and then look at growing that asset. Could you clear the air? Sanghi Industries, we understand, is on the block. Have you all had a look at that asset on the west? Because that you'll be moving across, across the spectrum to the other part of India.
Yes, so we of course did get to know about Sanghi Cement on the block, and we did evaluate it as well. However, for company our size, and given that we are already in an expansion phase where we are doubling our capacities, I do not think that it will be the right asset at this point for Star Cement.
Okay, and what about your Capex plan for this year and next year?
So we have already, till now, we had a Capex plan of about 2,200 crores, out of which we have already spent about 450 crores on the expansions. And we have about 500 crores of cash reserves in the company right now. So, in the next 1 year, there'd be an outlay of about, 1,500 to 1,600 crores. And, partly it would be funded by our own cash generation. And about 400 to 500 crores would be the amount of debt that we may have to take. But that would be a short-term debt with no long-term borrowing whatsoever.
Okay, final question then. You have the Bhajanka family and you have the Chamaria family as well in there. And over the last few days, we've been noticing that there has been some selling from the Chamaria family. Do they want to sell a larger chunk? Have you heard from them?
Yes, of course. So they do not plan to sell any large chunk. I think, they were selling some part of the equity just to raise their personal liquidity. And there's no plans of selling larger chunk.
Okay, well, on that note, we need to wrap up on Chartbusters, but stay tuned. Trading Hour up next.